DXY can make you a lot more money trading forex. What's up guys, welcome back to today's video. So today I thought I'd go through how you can actually use the DXY in order to make more money in forex, and also how to improve the accuracy of your trades, and also as an extra confluence to your trades in order to improve your win rate and overall trading performance. So if we get into the charts now, I'll show you what DXY is first of all, and then we'll go through some examples of how I would actually implement it in a live trading situation.
Guys, so before we go through how we can actually use the DXY in our trading on the charts, I thought I'd just start with this a very concise definition of what it actually is. So according to Investopedia, the DXY is a measure of the US dollar relative to a basket of different, I think it's 6 different currencies. So what this means in basic terms is that the DXY basically shows the overall strength of the US dollar, which can obviously assist us if we are trading USD pairs such as the Euro USD, the GU or Pound US dollar, gold as well. Obviously, any pairs which have USD in them, we can use this strategy for, and it can definitely assist our analysis and overall technical analysis of these pairs. So we go to the charts and we start with Euro USD. First of all, what we want to see is how the DXY actually correlates to the Euro USD. So on TradingView, if you don't know, you can actually add more than one pair to the screen at any one time. So to do this, we go to the top left and we click the little plus icon, and we can add DXY straight to the same chart. If we go to the higher time frames, it's more clear to see. Right, so what this is showing us is basically that Euro USD and the DXY basically have a perfectly negative correlation, meaning that if Euro USD is going up, DXY is going down. If DXY is going up, Euro USD is going down. You get the point. And as you can see from the graph, basically they peak and trough at almost identical points. So here we have the high formed on Euro USD, which coincides with this low being formed on the DXY. Then when we start this mini uptrend on the DXY, Euro USD turns bearish. And as you can see, they're basically perfectly negatively correlated, which can obviously definitely be used and played to our advantage. So first of all, what we're going to do, I'm going to go through a few examples of how I would actually personally use the DXY when looking for trades and actually placing them. So I always start with my analysis on the actual pair that I'm going to trade rather than the DXY itself. So if we were looking for a trade on Euro USD, I won't go too much into detail about the actual analysis behind these trades. I'll save that for another video because that's not the point of this video. But if we start at this point in time, what we can kind of see on EU is that we have come into this imbalanced area of demand, taken out all of this liquidity from buyers who were buying in a premium of the range. This was also the extremum of the current daily leg of the trend, which means that if this level broke, we would consider price to have reversed bearish. But since this level is hold, it is a good indication that price wants to continue bullish. On top of that, we swept these two equal lows, and then we also failed to hold supply. So this here would be our change of character, failure of supply, or break of structure, whatever you want to call it. So then what I would simply do is mark up from the low to the high and find out where our premium areas of demand are to be taken buys, as now I would have considered price to have reversed bullish, and we'd only be looking for buys at this point in time. So what I mean by a discount is that we want to see price come below the 50% of the current leg of the trend. Otherwise, our buy areas are not valid. Simple as that. Just because if you are buying in a premium, so above this 50% line, I find it to be less accurate, and the trades are more likely to hit stop loss if we do that. So looking below this 50%, we have a few areas where we could see price react from. So obviously we have this area of imbalanced demand here, and the only area that the only other area I see rather is this one immediately below. But personally, I'd see this one holding as being the most likely scenario here, just based on the momentum of the price. So once we have marked up our areas, what we want to do then is go to the DXY and have a look what the DXY is doing as well. So this was the 24th of March. We go back. Okay, so at the point where we would have been looking for buys on EU, this would be the price action on the DXY. As you can see, DXY is definitely in a bearish trend at the moment. It has been breaking past multiple areas of support or multiple lows. It just has been taking those out continuously, and demand has been continuously failing. So what we can anticipate on DXY is that it will come and take this low. And so on the DXY, we basically go ahead and highlight which areas that we would want to see price possibly react from for the further sells. In this case, we actually have this very nice area of supply, which if we zoom in, you can see is imbalanced. We sort of induced it with this wick here, but it didn't actually touch the supply. And then now price has come into that area, and we can wait and see if price holds this area and wait for a reaction for DXY to continue lower. And remember that if DXY is continuing lower, that is an indication that the dollar strength is diminishing and likely to continue losing its grip on the market. And that means that Euro USD is likely to continue bullish, because Euro USD up means dollar down, and vice versa. So if we just mark out this level and wait and see how price reacts from that level, we can see that if we go back to here, price has started to hold this level, which is a good indication that DXY may want to continue down from this level. On top of that, on Euro USD, we go back. So what we have now, Euro USD is in our area. DXY is in an area of supply where it is very highly likely to continue lower. So that would be our extra confidence for taking this trade. And of course, we would still want to wait for price to give us some sort of confirmation entry. So in this case, we do actually get a perfect confirmation entry. So what we can see is that price has swept these two equal lows. We have then broken structure to the upside just here, and we have left behind a very nice level of imbalanced demand just below. And that would be our entry point just here. And since I said, DXY was likely to come and take the current low of the trend, this would correlate on EU, as EU is likely to take the trend high. So we could take this all the way up to the trend high, but personally I would probably have taken profit at this level of supply, just because one interpretation of this is that we have had break of structure, and price may want to come up, retest this supply for further sells. So just one interpretation, and I'd be wary of this supply in case price does want to do that. So we can see if it plays out, which obviously we know it is going to, because this is bar replay. There we go. So that is how I would use DXY in order to add weight to a specific area of interest that I'm looking at. So in this case, for example, if we go through it again, what I did was highlight this as an area of interest, and then to add weight or probability to that area, I went over to the DXY and saw if price was in an area of supply or a key level where I know it would be likely to reverse from. And if it is, this adds an extra confluence to the trade. For example, if DXY at that point in time had, let's say it was instead here, then I would know that that level on EU was very unlikely to hold, since DXY has left all of this imbalance unmitigated and hasn't really pulled back yet, giving us an indication that DXY may want to continue further up before continuing down, to come up to one of these areas. And in that case, I would invalidate the level on EU. So you kind of get a sort of an idea of how I use DXY. In basic terms, what I'm doing is highlighting my POIs on Euro USD or any triple X USD pairs. And then on DXY, I'm seeing if that coincides with an opposite area. For example, if I'm looking for buys on Euro USD, I'd highlight my demand areas, and on DXY, I would highlight my supply areas, so in the opposite direction, and then see if those two levels coincide. And if they do, it adds weight to your area of interest. So the second way that I actually use DXY is to spot if an area of supply or demand is actually invalid. So if I go through that now, if we get an empty chart. Right, so this would be a good example just here. We get rid of this. So if we were looking at this price action from a different perspective and we had an analyzed EU in a different way, what we could actually say is that price came up, took out these equal highs here, came into this area of supply higher up when it wicked into it here, broke this level of structure. You could also say it broke this level of structure as well, depending on whether you use body closures below or wicks below. If you use wicks below, then this would have been a break of structure for you. So then we could have also said, if we get bar replay, we could have said, well, this area of supply just up here is the one that caused the break of structure, and therefore we would be looking for sells with a confirmation if price is going to return to that level. However, we know, so if we check DXY at the same point in time, I think that was around, so that was around the 20th of March. Okay, so at that same point in time, what we can see on DXY is that it has actually come up, respected this area of supply, and broken a new low. So what we can infer from this is that DXY is definitely highly likely to continue down. We also have this area of liquidity just here, where it is most likely going to go and target. There isn't really anything between where it is now and this area to stop it and cause it to break into a new high. There's not really any areas of demand which have enough weight to do that. This one maybe, yeah, but DXY still has a long way down before it reaches that area. And because DXY is likely to continue down, we would invalidate that area on EU, because we know that they are negatively correlated, and so EU is likely to continue up, at least for a little while. You can also see that their price actions were pretty similar at that point in time as well. So we get rid of everything else. You can see how this area here looks identical to, getting rid of this. It looks identical to this level on the DXY. And in fact, if we actually flip the chart, you can see that the price action at that point in time was basically the same, but flipped, obviously. So to recap what we've just gone over, we can use the DXY to add extra weight to our areas of interest when looking for potential areas where we could see buys or sells from. And to do that, we basically look to see if DXY is in a key level where we would firstly expect a reaction, and where secondly we would expect it to continue in its current direction. So for example, if we are looking for Euro USD buys and we have highlighted our areas of demand on the DXY, we would go onto the DXY and highlight any areas of supply where we think that price may react from and continue in its current bearish trend. And then if those two levels do actually coincide, meaning that if EU and DXY get to those levels at the same point, we can use that and infer from it that the level on EU that we are looking at is much more likely to hold, because we have the added confluence of the dollar potentially continuing lower. And obviously vice versa, if we're looking for EU sells, we will look for DXY buys and any reasons why we might see buys on the DXY. So that is basically how I use the DXY. It is definitely a useful tool if you are unsure of which areas to use on the USD pairs. Normally I find actually that it is more useful on pairs that are not perfectly correlated with it. So for example, if you go on USD JPY, you'll see that there is a slight positive correlation between DXY and UJ. However, it's not perfect, meaning that basically the areas don't normally coincide. So with EU and DXY, the areas are basically the same but flipped up. So in live trading, it's not always that helpful because you don't know if the levels on DXY are going to hold. But on UJ, they're not positively correlated and they're a bit lagged, meaning that the level on DXY, you may get a reaction, say to the downside first, and then on UJ that hasn't actually happened yet. So UJ is lagging behind. And so you can kind of foresee what's going to happen on UJ, if that makes sense. So yeah, I hope you guys found this video useful. If you did, make sure to like, subscribe, and also comment what videos you want to see next. In addition to that, if you want to copy all of my trades completely free or learn how I trade, I'll leave a link to that in the description below. And I will catch you guys in the next video.